Vale released its operating results for the fourth quarter of 2025, which essentially serve as a spoiler of what we can expect from the earnings results the company is about to report. The stock is up about 80% in the last 12 months. Imagine those who buy the bottom. They locked in spectacular dividends from Vale. Esqueci que sou brasileiro. Vale. And it's not just Vale that has rallied strongly. I also talk about the factors that could push the Brazilian stock market even higher in another video. Don't worry, by the end of the video, I'll remind you to go check it out. Vale is proof that staying focused on a company's operations with the long-term mindset really pays off. First, we look for strong fundamentals, then solid numbers, and finally attractive long-term prospects. In terms of operations, the real inflection point for Vale is expected from 2030 onward. 2030 onward. So let's go through the operating results. Overall, Vale ended the year exceeding its production guidance, with the exception of pellets, which came in slightly below the initial guidance due to market conditions. In other words, given market conditions, the company produced fewer pellets and diverted more output towards iron ore fines. In the initial guidance, Vale exceeded expectations for iron ore production, coming in above the top end of the range. Pellets were slightly below the initial target, but still in line with the updated guidance. Copper and nickel production both exceeded the upper end of the guidance ranges. This is something the market pays very close attention to. Vale exceeded all of its guidance expectations. The main constraint was market conditions, which the company addressed by shifting production toward iron ore fines. Looking ahead to 2026 guidance, iron ore production is expected to increase, as what was previously the upper bound of guidance now becomes the minimum level. Pellets are expected to increase slightly, although the company still anticipates a tight market. Copper and nickel are also expected to see production growth, with positive growth outlooks. Overall, the 2026 guidance points to further operational improvement compared to the current guidance. From a production standpoint, the company is performing well, and when we look at sales, which ultimately drive quarterly results, iron ore sales were up 4.5%. Iron ore fines increased by 5.2%, while pellet sales declined 10% quarter-over-quarter due to tight market conditions. Copper sales increased by 8% and nickel by 5.3%. So the company produced tons, exceeding guidance, and successfully sold that production. And these sales were realized at specific prices, which depend on market conditions and product mix, including quality. On a year-over-year basis, all-in copper saw an increase in realized prices, but as we all know, we're currently in a down cycle for commodities. So this comes as no surprise. What matters is that results remain consistent, with no sharp decline so far. As we've already seen, iron ore and pellet operations drove this growth. The southern and southeastern systems increased production, while the northern system experienced a decline due to temporary shutdowns and maintenance-related downtime. In the southeast system, availability improved due to the ramp-up of Campanema, a new mine that started operations at the end of the third quarter of 2025. This investment is expected to reach full capacity by the second quarter of 2026, so there is still more upside ahead. In the southern system, ramp-ups of new projects, in this case iron ore tailing filtration plants, along with better operational performance, also supported production growth. On the pellet side, due to weaker market conditions we discussed earlier, Vale chose to sell iron ore fines instead of using them as feedstock for pelletizing plants. This is a strategic decision. If margins are going to be compressed anyway, the company aims to minimize losses. Now, here's something interesting regarding iron ore premiums. Margins. Vale has introduced a new product within its iron ore portfolio. The company realized that the ore it previously sold at a standard price could be processed into an intermediate grade product, which commands a higher price than its traditional offerings. Vale is now focusing on this medium grade ore to improve margins. Previously, lower quality ore was sold at the same price. Now, separating this intermediate grade will help enhance profitability. In copper operations, Vale managed to grow production both in Brazil and Canada. In nickel, the company achieved growth despite having sold one nickel asset in the past. This growth is partly non-recurring, but strong performance in Brazil more than offset a slight decline in Canada, resulting in overall growth. Now, Vale's long-term estimates. Regarding nickel, Vale is focusing on efficiency while targeting global energy transition. The shift from polluting fossil fuels, oil, coal, to renewable and sustainable alternatives, solar, wind, biomass. Nickel is used in rechargeable batteries for electronics and electric vehicles, and it's also used in stainless steel production for household goods and construction. Vale is one of the world's largest nickel producers, and by early 2027, Vale aims to reach cash flow break-even. In other words, after cost optimizations and disciplined capital allocation, the company expects to operate without losses by 2027. This is part of a long-term strategy. Vale has been working on efficiency improvements, cost reductions, and plans to increase production. Beyond nickel, copper also stands out as a highly ambitious project for Vale. It's also interesting to observe the company's investment intensity. The budgets for upcoming projects reflect capex, capex levels, investment levels that are lower than previously planned and below the industry average. What's truly striking are the returns, internal rate of returns above 50% for projects starting in 2028 and 2029. Do you know who also had that kind of internal rates of returns in the past? Aura Minerals. Aura Minerals. That doesn't necessarily mean we'll see an explosive growth at Vale, as we see in Aura Minerals right now. In fact, Vale itself provides expectations for free cash flow returns under different scenarios, based on iron ore prices and copper and nickel prices. For the most conservative scenario to more optimistic yet still plausible scenarios, expected free cash flow returns range from 6% to 14% in 2026 and from 8% to 21% in 2030. It's important to note that this is not the total shareholder return. These figures reflect free cash flow returns only and do not include share price appreciation, future growth, or multiple expansion. In summary, results are solid and already largely reflected in the stock price, although there may still be upside following these results. We could see some volatility due to news that the government may take action against Vale over recent environmental damages. Personally, especially after this strong rally, I would like to see better entry prices. As you know, the stock has traded at much more discounted levels in the past. But since the future is uncertain, for now it's a matter of waiting and seeing what lies ahead. 2026 is shaping up to be a very volatile year in Brazil due to elections, and I'm preparing for that. And as promised, did you think I would forget? I almost did actually. The Brazilian stock market has already risen significantly, but there are still opportunities. Check out this other video where I discuss some factors that could push the Brazilian market even higher. See you next time, Brazilian investor, literally from Brazil, with facts, not samba. Muito obrigado, um forte abraço e até a próxima.